concept. The next concept is dual aspect accounting concept, guys. Dual aspect accounting concept. See, for every transaction, for every transaction, for every transaction, two or more aspects. Okay. So for every transaction, at least two or more aspects will be happen. So, example, we purchase some goods on credit. Okay. So we purchase the goods on credit. Purchase of goods on credit from vendor XYZ. Okay. For 10,000. So in this transaction, there are two aspects are involved in this transaction. One is receiving aspect and the second one is giving aspect. Okay. So receiving aspect and giving aspect. So what is the meaning of Sunil, can keep on mute? Okay. So what is receiving aspect and what is giving aspect? Let's understand this. Okay. So here we are purchasing the goods on credit basis. So what we are receiving in this particular transaction, what we are receiving, guys? What we receiving?
Cash, goods,
Goods.
cash,
Goods.
goods. And
That is
Goods.
goods purchases. Okay. So who is the giver here?
Credit.
Who is the giver here?
Creditor.
Vendor
Vendor.
Vendor.
XYZ.
vendor, sir, XYZ.
See, for every transaction, so here we are purchasing the goods on credit basis from a vendor XYZ. So here the goods we are receiving and we are receiving the goods and who is the vendor XYZ. So for every transaction, there are two or more aspects. How many aspects, guys? There are two or more
More.
aspects. Okay. So in previously, companies used to follow single entry system of accounting. Single system of accounting. Single entry system of accounting. So what the single entry system of accounting says that there is no point of recording two aspects in single entry system. I'm not telling now, guys. In previous recording of only one aspect of only as one aspect of account in the transaction in the transaction is called single entry system of accounting. Single entry system of accounting. So the transaction will be recorded only one aspect. There is no two aspects will be recorded. So those method of accounting is called as single entry system of accounting. So those method of accounting is called as single entry system of accounting. See here, what we used to do in the previous example, you in this particular transaction, they will record purchase of goods on credit. They will not record two aspects. They will record just purchases 10,000 rupees. If the same way they make some sales, they will update as 1 lakh. If they receive some money, they will update as receive 1,000 rupees. If they pay some money, they are updating it as payment 10,000, 1 lakh, whatever it might be. So in previously, the people used to follow only single entry system of accounting. So what they're doing, they're recording purchases, sales, receipts, payments, like that. So example, in a day, if you have been encountered with the transaction of 100 transactions with purchases, is it possible to track from whom we purchase? So in a day, if you purchase 1,000 plus transactions, if you update every transaction as purchase, purchase, purchase with different amounts, is it possible to track? It is very big.
No.
It is very big, hectic to task, guys. Okay. And here we don't have clarity from whom we purchased to whom we made a payment and from whom we are receiving the money. So this kind of feasibility is not there in the previous. Okay. So to reduce this kind of confusion, they have been introduced dual aspect of accounting system. Dual aspect of accounting system, that is called as dual entry, dual aspect accounting concept. Dual aspect concept. So let's understand what is this. So the dual aspect of accounting system is nothing but recording of transactions, recording of transactions, both the aspects of both the aspects of accounts is called dual aspect accounting system. Aspect accounting system. Recording of both the aspects of accounts in the transaction is called as dual aspect accounting system. So in previous, what we used to do, but we are recording only one side. Now purchase of goods on credit from vendor XYZ 10,000 rupees. In this transaction, we discussed what are the two aspects. Receiving aspect is purchases and
Vendor.
giving aspect is vendor. So here we are recording both the aspects, that is purchases account to vendor account. So this vendor XYZ account. So if you record the transaction on both the aspects, we can easily track from whom we purchased. So if anyone can see this transaction, they can easily tell that we purchased the goods from XYZ. And it is also convenient to track. It is also better to understand the total of debit and credit. To match the accounts, it is very easy if you follow the dual aspect accounting system. So in entire universe, now all the companies are following the dual aspect accounting system. What the dual aspect accounting system says that if there is a transaction has two aspects, two or more aspects, recording both the aspects, one is on the debit side and one is on the credit side, that is called as dual aspect accounting system. Okay, dual aspect of accounting system. Yes, understand? It's clear. See, let's see about the definition now. So the definition says that, see, dual aspect concept refers to the double entry bookkeeping method. It means each transaction must be not one is on the debit side and another one is on credit side. One is on debit side, another one is on credit side. So one's on the debit side and secondly on the credit side. So the dual aspect concept is very important because it helps in balancing the accounting books. When a transaction is noted two times on the opposite side of the same balance sheet, it makes incredibly easy to check whether the transaction recorded in balance sheet are correct or wrong. It significantly reduces the chances of financial mistakes, guys. Okay, it's understood. So dual aspect accounting system says that for every transaction there will be two or more aspects. Recording of both the aspects of accounts is called as dual aspect accounting system. So in the previously, so the people is to follow the single entry system. So what is meant by single entry system? It is also a technical question, guys. Recording of only one aspect of accounting uh, to a single entry system. What is meant by dual aspect accounting system? Recording of both the aspects of transactions is called as dual aspect accounting concepts. Okay, let's understand.
Yes.
Yes.
Okay,
Yes.
let's move to the next concept, guys. Okay, so let's move to the next concept, guys. Okay, so the next concept is going concern concept. Okay, so the name itself telling the going concern concept says that the business should be run for a longer period. Okay, so the business should run for a longer period. So going concern concept mainly says that the business will continue its operations for a future with no intention of liquidation or closing of the business. Simple words. So business entity going concern concept says that going concern concept says that business business will continue its operations for a future for a future for a future and and no intention no intention of no intention of liquidation, that is company will get closed. So I'm telling, so this going concern concept says that the business should run for a longer period, so without intention of liquidation is nothing but the company will get closed. So without closing the business, the company will continue for its operations for a future. That concept is called as that concept is called as uh, going concern concept case. So it mainly says that, so we need to show the value of asset more. So the main signs of going concern concept is when a company is going into the losses or any negative cash flows, or any company has taken into a losses and it going into a crucial situation where the company is getting closed. So in such cases, as an accountant, we need to realize and we need to give the suggestions to the company management to increase the company's financial uh, growth by taking any sort of new loans or investment in the new aspects, and which will continue for a longer period, guys. So it is mainly used when the possible chances of companies getting lost, guys. Okay, so just for your knowledge, this not much technical question. See, this accountants use this concept when significant concern regarding liquidation of an asset. Liquidation of asset is nothing but company is getting closed. So the going concern concept is applied when the chances are high that company will be liquidated. That is, company will be closed in next 2 or 4 quarters. That is, next 6 or 1 year. So usually when keeping books, accountant do not think that business will be bankrupt or liquidated. So this allows to put price of an asset that can be corrected for a longer period, guys. Okay, so in simple words, we can say is that the going concern concept mainly focuses on business will continue its operation for a future, will not liquidate in the near time. This is called as going concern concept, guys. Okay, just for your knowledge, guys. Is any doubts in this? Okay, so let's move to the next concept, guys. Okay, so accounting period concept.
No, sir.
Sorry, your voice is breaking. I could not able to hear you. Okay, fine. Great. So let's move to the next concept, guys. Accounting period concept. So let's understand what is this concept says. So let's understand with a simple logic. Like example, we are a BTech or become graduates, guys. Okay, whatever it might be in education, like every year, your learning ability will be measured through the final examinations. Correct? Like what you studied, that will be measured. So if there is no target like that, the entire 4 years of BTech or the entire 3 years of degree will be keep the exams at last. Is it possible to measure what you are learning year by year? And do you have a target what you learned every year? No. So you will have a target if you keep the year-wise examinations. You can easily measure your skill. What you scored in first year, what you scored in second year, what you scored in third year. You can easily estimate what is your learning ability. Is it increasing or decreasing? It is possible to measure if you have a target of yearly ones. Same way, the company started long 50 years back. How can we measure the financial performance of a company? By following this accounting period concept, guys. Okay, so every company in entire world will need to follow the accounting periods. Okay, so it is a 12 months accounting period. It is yearly wise. Why the accounting period is to be followed? To measure the company's financial performance. Financial performance. So what company earned from last April to till March 2026? What is the company's profit in last 24th of April to 25 of March? So the financial year, what is the profit of last year financial year? What is the profit of current year financial year? What is the assets of last year? What is the assets of current year? Whether the company is increasing or decreasing. This kind of feasibility will be there. We can understand the company's financial performance only if we have accounting periods to measure the company's financial performance. Every company, even a startup company to end like an MNC company, every company has to submit their financial statements and financial returns to the government on yearly basis according to the financial years, according to the financial year, guys. Okay, like in India, we are following mainly what is the financial cycle, guys? April to March. So our Indian companies need to submit their financial returns. Like we need to see that income tax returns, everything. So when is the cutoff date? So last year they given till December. So before December, they need to submit the financial results of financial statements to the government. That is to income tax department, and they need to pay off the taxes, guys, if anything. Okay, so Indian countries, what the system they are following? April to March. If you go to US, what is the financial year they are following? August to July. Okay, and if you come to UK countries, they are following Jan to December. Okay, so there are two types of financial years, guys. There are two types of calendars. One is financial year, one more is CY. CY means calendar year. Calendar year is common in entire universe, that is Jan to December. Financial year changes from according to the countries, guys. Okay, in India, what is the financial calendar we will follow, guys? If you go to any Indian company, what is the financial calendar they will follow? April to March. So if you come to US, they will US countries, all countries, they will follow the financial calendar of August to July. Okay, so UK based countries, that is German, European countries, they will follow Jan to December as their financial calendar, and same calendar for calendar year also. Okay, so every financial year, how many accounting periods will be covering? 12 accounting periods. How many accounting periods, guys? 12 accounting periods. And how many quarters? 4 quarters. 4 quarters. Okay, 12 accounting periods and 4 quarters. If you take out any cycle, guys, April to March, how many months, guys? April to March, how many months?
12.
12 months.
If you follow August to July, how many months?
Same tool.
Same.
12.
12. If you follow like Jan to December, 12. So whatever the
Same.
cycle can be, every financial year will having 12 accounting periods. So decision of accounting periods completely depends upon the nature of company origination. Origination is nothing but where it is being started. So if the company like Accenture, it has been started in Ireland and it is been operating from US, the head office. So Accenture is following August to July. Capgemini is following August to July cycle. If you go to Infosys, Infosys is which type of company, guys? It is? Is it US company?
Indian company.
Indian company. Following April to March. Okay, you can go and check the Infosys books of accounts. They are following the April to March because they need to submit the entire financial results to the government before that cutoff time period. So according to the government decisions, they will keep these financial years, guys. Okay. Is understood? So why it is important to measure the company's financial performance? What the company earned in last month, last year, last quarter, like that. To measure the company's financial performance, accounting period concept is very important. Okay, so accounting period concept refers to the division of accounting records into similar multiple measure times. The time can be quarter, semi-year, or a whole year. So the performance of a company is measured and disclosed to the investors in the regular time period. So even investors in the sense the shareholders will show interest on investing in a company according to the reports what we submitted. So based on the reports, they can analyze the company's financial performance. So whether the company is in growing or is into the losses. If it is in the growing and they are expected to increase in the future, so in such cases, the investors will show more interest and invest money into the company. So that is called as accounting period concept, guys. Okay, it's understood.
Yes, sir.
Okay, so there are 12 accounting periods, guys. Okay, 12 accounting periods. So every financial year has 12 accounting periods, and each accounting period will be identified with the naming conventions. Like example, let me share my screen. So let me show you the calendar, which previously see guys. So what is this is the financial calendar for which company, guys, it is? Guys, what is the company name it is?
Cisco.
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 So it is a
Cisco
US-based
system.
company, and this is the financial calendar of their company. So what is the how many quarters they have? 4 quarters. What is the starting month and what is the ending month, guys?
August to July.
Yes,
August
and
to
ending month is
May.
July. So according to this only, our end-to-end activities in the companies will depend if you're working for Cisco. Okay, see here, August is the starting month and July is the ending month. Okay, so when is the starting? August. How many quarters? 4 quarters. August,
4.
September, October, first quarter. November, December, January, second. February, March, April, third. May, June, July, fourth quarter. Okay, so see, according to this only, the release, quarterly earnings release. So what the company has earned in this last 3 months, when they will release to the investors, they will release on 15th of November. So they given the dates like that. So when the holidays, Cisco US holidays. So we used to discuss the client holidays in our real time. Okay. So today is my client off. I'm not working. How they will fix this? Is it a client holiday or not? According to this calendar, guys. If you're working with this company, they will give this calendar. Okay. So when there is a given like September 4th and November 10th, 23rd, 24th, and so shutdown PTO. So there is a holidays at December. What is the reason for this, guys? What is the reason for the holidays on December 25th to Jan 2nd?
Christmas.
Christmas.
So there is a shutdown. So how we are deciding whether we need to take the leaves or not according to this case. Okay. So the company is following this financial calendar. Okay. Is understood? Is clear?
Yes, ma'am.
Okay.
Yes, sir.
So let's see example. If my company, how many accounting periods I told you, guys? 12 accounting periods.
12.
Every accounting period will be identified with P. P is nothing but period 1, P01, P02, P03, P04, P05, P06, P07, P8, P9, P10. How many accounting periods in the first year? April to March, 12. So when is the starting period? April. If you are following,
April.
if a company is following April to March, what is the starting period? Yes, April, mm,
April.
April,
March.
sorry, May,
May.
June, July, August, September, October, November, December. Sorry. Yeah, Jan, P12, P11, P12. Okay. So what is the P11 is February, March. Okay. So if my company is following August to July cycle, August to July cycle, August to July, what is the first period, guys? When it will start,
August,
when it will end,
July.
when it will end, July. So this completely, if it based on the company's head office, it will decide, guys. Okay. So it will decide. Example, if my company is following Jan to December, what is the first period, guys?
January,
What is the last period?
December.
December.
Okay, so December. So they used to, even in SAP, Oracle, all the environments, the configuration. So we should not update the month August. We should not update the month December. So example, my company is following August to July cycle is August to July cycle. So I updated a report. The report is showing P10 FY26. So if my company is following August to July, what is the P10, guys? What is the P10?
May.
Period.
May.
May,
May.
sir.
May. Okay. So this has to be understood, guys. Okay. So if example we are following April to March, and what is the P10 FY10 P10 FY26? Which
Jan.
month it is?
January.
January.
Okay. So like this, if example, if you are following Jan to December,
October.
October.
either.
October.
Okay. So we used to call the naming convention P1, P2, P3, P4. It is completely depends upon the accounting period what we are following. Guys, understand? Any doubts in this?
No.
No, clear.
No.
Yes, understand, guys? Clear? So
Yes, sir.
why this is why in the real time why it is very important to measure the company's financial
Company
performance.
financial performance.
Okay, it's understood. Okay, fine. It's clear. Okay, guys.
Yes.
This is about the accounting period concept, guys. Next, move to the cost concept. So cost concept in the accounting says that we need to show the original cost of an asset, not the current price. Okay. So cost concept in the accounting says that we need to show the original price of an asset, not the current cost in the market. Okay. So that is called as cost concept in the accounting. Okay. So cost concept in the accounting. Okay. So what the simple meaning we can say is that, so cost concept is nothing but, so we need to show the value of asset what we purchased, not the current market price. Okay, not the current market value. So that is called as cost concept in the accounting. Okay. So example, I purchased. So example, 1 minute. So I started my company in 2001. What is the value? I purchased my company's land. I purchased a land for my company. So what is the worth I purchased that time? Assume I purchased for 10 lakhs. So today the market value, example 2025. What is the land market value today? Assume it is 25 lakhs or 40 lakhs, whatever it might be, guys. Okay, so 40 lakhs. So what this cost concept says that we need to show the original cost, what we purchased. So what is the value we purchased recorded in the books as 10 lakhs, not the 40 lakhs. That is called as cost concept. So we need to show the original cost of an asset, not the current market value. That is called as, so even if you purchase one machinery, so the machinery cost is 50,000 earlier. Now it will becomes to 40 or 80, whatever it might be. So we need to show the original cost of an asset. That is called as cost concept in the accounting. Okay. So assets are, we need to show the original cost, not the current market value. That concept is called as cost concept in the accounting. Guys, understand? Sorry, guys.
Yes.
So in previously, like if you purchase any asset, guys, not only land, I'm telling. So the cost concept allows the value of an asset to be noted in the balance sheet at the price at which it was purchased, or cost price, that is total cost price, opposite to the current market price. For example, machinery and equipment purchase will be noted at a purchase price rather than the current price. So if you purchase the machinery on 2020 for 10,000, now it might increase it to 40,000. Can we show 40,000? No. What is the
No.
value of asset we purchased? That value we need to show.
20,000.
That is called as cost concept in the accounting. Even a machinery is very old and not worth, so we should not show the current price. We need to show the value of asset what we purchased. So that is called as cost concept in the accounting. So for this, the depreciation is being, okay. See, while considering the total cost of an asset, total cost of asset. So what are the various parameters to be considered? So various expenses to be included for total cost of asset. Total cost of asset. Okay, total cost of asset. So what are the various expenses to be included? So we need to include the total purchase price. What is the total purchase price? And any taxes, that is import duties and non-refundable taxes, non-refundable taxes. Okay. And if you pay any transportation and any installation charges for the asset need to be included to the direct cost. Okay. So these are the various cost, guys, or any direct expenses. Like example, you bought one asset, for unloading that asset you paid some labor charges, that is direct labor, so we need to include the total cost. And expenses not included, expenses not included. Yes, can you keep on the mute? Yes, okay, guys. See, we need to, what are the expenses need to be not included in the total cost of an asset? So if there is an admin expenses, like administration expenses not included, and any training cost for installing, after installing that machinery or anything, so the company paid some training cost, so those not to be included, guys. So example, what is the total cost to be considered? Example, I purchased one machinery. So assume the scenario is one asset is purchased for running my business, 1 lakh rupees, and installation charges 5,000, and I paid transportation charges to bring that machinery to my office location. I paid 5,000 as a transportation charges, and wages for installation and 2,000 I paid, and admin expenses, that is administrative expenses, I paid 5,000. So tell me, what is the total cost as per your understanding, guys?
Same 1 lakh only.
Sorry, what is the expenses we need to be included? The total
1 lakh
cost,
12,000.
1 lakh.
12,000.
Yes, 1,12,000. So these admin expenses, general administrative expenses not to be included, guys. Okay. So what is the total cost of an asset now? Total historical cost of asset 1 lakh 12,000. So this is the concept of cost concept.
1,12,000.
Okay, what cost concept says that we need to show the value of asset as per the current cost, not the purchase price. Sorry, not as per the purchase price, as per the purchase price, not the current market value. That is called as cost concept in the accounting, guys. Okay, clear? Yes, understand, guys?
Yes.
Yes, sir.
Okay, fine. So let's move to the next concept, guys. Matching concept. So what this matching concept says that we need to match the revenue and expenses in the same accounting period. Okay. So what is matching concept says? We need to match the revenue and expenses in the same accounting period. Okay. So we need to match the revenue and expenses in the same period is called as matching concept. Okay, so we need to match the revenue and expenses in the same accounting period, so that is called as matching concept. Just give me 1 minute. Okay, so what is this matching concept says, guys? So we need to match the revenue and expenses in the same accounting period to match the profit, guys. Okay, so that is called as matching concept in the accounting. Matching concept in the accounting, guys. Okay, so example, see, we have been earned. So for this we need to record all the transactions in the same accounting period. Okay, so all those are transactions in the same accounting period. So simple words, recording of all the transactions in the same accounting period is called as matching concept. Okay, so expenses and revenues should be recognized in the same accounting period as the revenue. Okay, so example, guys. So example, we made some sales. Assume sales made in March. When we made a sales, guys, assume sales made in, understand, sales made in November. We need to pay that commission paid in December. So for the sales agents, there is a sales agents. Okay, understand? One simple example so that you can understand what is this matching concept. It is commission expenses, guys. The concept is commission expenses. Generally, for what we will make a commission, if you make any sales, company will pay the commission to you or incentives to you. Okay, so we made sales in November and we need to pay that commission in December to the sales agent. So what is this revenue? In which month the revenue earned, guys? Guys, the revenue is earned in which month? Sales is
December.
November.
sales revenue is earned in November. So when the commission is to be paid?
December.
December.
December. So what this matching concept says that we need to recognize the revenue and expenses in the same period. So what, even if you are going to pay this commission in the future periods, okay, so you can pay in December or January or April, whatever month it might be, you need to recognize that expenses in the same period. So you need to recognize the commission payable in the month of November. Is understand? So the same month we need to match the revenue and expenses. If you make a sales, what is the expenses incurred for that? So we need to recognize in the same period. We should not recognize this. So we are going to pay in December. We do not tell that I will record these expenses in the month of December. So that is not a matching concept, guys. Recognizing of revenue and expenses in the same accounting period is called as matching concept. Okay, yes, understand?
Yes.
And one more example, assume there is one insurance, prepaid insurance for office car, So December 25th, December 25, paid whole year insurance, whole year insurance on office car 12,000 rupees. So this insurance is amount is pertain to which month, guys? Is it for which month to which month? Paid the whole insurance year, office car insurance on office car 12,000 for financial year 20. So every month, what is the for which year they paid the whole year insurance? Normally, we will make a car
January
insurance.
to December.
December 20.
We will make the advance payment and we will take the services from the insurance company. So for which year to which year? Jan 26 to December 26. Okay. What is the amount they paid? 12,000 rupees. Okay. So what is the monthly amount it is? January month, what is the amount it is? 1,000 rupees. February, 1,000. March, 1,000. December, sorry. Like this, every month we need to recognize these expenses. That is called as matching concept, guys. Understand? So recognizing of revenue and expenses in the same accounting period is called as matching concept. Okay, guys, understand? So which month it is? We need to recognize. So revenue matching concept refers to reporting of revenue and expenses in the same time period. The revenue and expenses must be recognized in the same under the same accounting period. It is very important because company does not recognize the expenses and revenues on the same accounting period. It will leads to mismatches between profit and expenses. Is understand? Clear?
Yeah.
Okay, guys.
Yes,
So the next concept is last but not least, but it is very, very important. So there are two methods of accounting system, guys. Two methods of accounting system. Okay, accounting system. So one is cash basis of accounting system, accrual basis of accounting system, accrual basis of accounting system. So there are two methods of accounting system. So let's understand the definition of both individually. Okay, so accounting system, the first is, so in cash basis of accounting system, the transactions are recorded only when the actual cash payment or receipt is made. Okay, so the transactions are to be recorded only when the actual payment or the actual cash payment or receipt is made, not on the transaction, occur date. This is a old method, guys. So example, understand. So 1st January 2025, purchase of goods for on credit 10,000 rupees from XYZ. So 15th June 2025, payment made to vendor XYZ 10,000. So according to your understanding of the definition what I have been wrote here, kindly tell guys when the transaction will be recorded. Is it on 1st Jan or 15th June, guys?
June.
15th June. So 15th June, the transaction will be recorded in the previously. It is a old method, guys. So if you record this, what is the major disadvantages? The major disadvantages is one is missing of transactions. Can we remember all the transactions only when we make a payment, guys? Is it possible? Is it possible?
No.
No.
One great disadvantage is missing of transactions and no proper track of payables and receivables. What amount we need to pay, what amount we need to receive, we can't able to track it. And Sometimes profits are overstated, profits are overstated or understated or understated. Inaccurate financial reports. Inaccurate financial reports. So to reduce this kind of problems, okay, so they have been introduced a new method is called as accrual concept. That is accrual basis of accounting system. Okay, accounting system. So in this method, the transactions are recorded. Transactions are recorded when it occurs. When it occurs, instead of payment or instead of payment or receipt. Okay, so the transaction will be recorded when it occurs. The payment is going to make now or you are going to make in the future, that's not a problem. But whenever it happens in the same month, the transaction will be recorded. That is called as accrual concept. So here on 1st Jan, we will record it as a purchases on credit, purchase on credit. On 15th June, we will record it as a payment to vendor. Payment to vendor. Okay, guys, understand? So that method. So if you record the, if you follow this method, no missing of transaction. Is the when it happened? If you record, is there any missing of transaction, guys?
No, sir.
No missing of transaction. Proper track of. Proper track of what amount we need to receive, receivables and payables, and reports are accurate. Reports are accurate. So nowadays in entire world is following the accrual basis. Accrual basis, guys. Reports are accurate. So that method is called as accrual basis of accounting system. As in my in my previous experience, if you attended a 10 interviews in a day, all 9 interviews, 100%, once in a while, knowingly or unknowingly, the manager will ask, what is accrual basis of accounting system? Because I will explain this entire concept in next coming sessions, guys. What 2 days it will take to understand complete history of how the accruals will work. Now, time being, let's understand what is the definition of this. Okay, it's clear. It is very, very important, guys. Okay, accrual accounting concept allows the income and expenses to be stated in the same accounting period that was incurred in or not in the accounting period, which means expenses, the income was obtained or expenses were paid. This is called as accrual concept. A lot of times suppliers are not paid exactly when the delivery of the goods. The payment time can be ranged from 1 week to 6 months. The accrual period allows the suppliers to note the income and delivery from the at the time those goods were delivered, not the time when goods were paid. So that is called as accrual concept of accounting, guys. Yes, understand, guys? It's clear? Yes.
Yes, sir.
Okay. So there are 2 methods. This is very, very important question, guys. What is cash basis of accounting? What is accrual basis of accounting? So this cash basis of accounting system, no companies are following now. But for your understanding, I told you how the companies are following in the previous, but it is a technical question. Okay, clear? Yes, understand. Okay, guys. Thank you, guys. I'm sending you the notes. We'll meet on.
Sir, there is one mistake there, sir.
Sorry.
Please share the screen, sir, once.
Yeah.
Sir, there you wrote the example, no, accrual for that one. 15th June only you have written, sir. There you have to return Jan, no?
I given the example of 15th June, we are making a payment, right? So in this
Yes,
method, when we are going to record the transaction?
No, sir, the example is same for accrual and cash basis. The cash basis it is correct, sir. I am saying about the accrual. So there also it is June only is there. No?
See, 1st January, we will record it as purchase on credit. I given below to this,
Yes.
right? Okay.
Yes.
On 15th January, 15th June, we will record it as a payment to vendor.
Okay.
2 transactions we will record, right?
Okay. Okay. Okay.
Getting?
Yes.
I think it's correct. There is no any change.
Okay.
Okay. Clear?
Thank
Okay,
you.
guys. Okay, guys. Thank you.